Welcome to this explainer. Today, we're diving into what I think is an absolutely fascinating turnaround story, IQE plc. If you follow the semiconductor space, you know things are shifting at lightning speed right now. So we're going to take a magnifying glass to IQE's 2025 financials to see exactly how they are navigating some seriously turbulent waters. Imagine this for a second. How exactly does a massive global semiconductor supplier bounce back from a gut-wrenching 60% drop in earnings? I mean, that is a classic make or break moment, right? It's the ultimate test of a management team's strategic vision and, honestly, their pure resilience to get ready for the coming AI boom. To figure out how they pulled it off, here's our roadmap. First, we'll look at the hard truths of 2025. Then we'll break down their massive £81 million strategic fundraise, look at the painful operational shifts they had to make, and finally, look ahead to their AI roadmap for 2026.
All right, Section 1, 2025, a challenging year. Let's just rip the Band-Aid off and look at the financial dip.
When you look at the summary straight out of their official report, there's no sugarcoating it. 2025 brought a really steep decline across multiple key metrics. It was a year absolutely dominated by external pressures and some serious supply chain adjustments. Just putting the numbers side by side tells the story. Revenue slid from £118 million down to £97.3 million. That's nearly an 18% drop. And while that was happening, you can see their adjusted net debt creeping up, going from about $18.8 million up to $31.5 million. The cash pressure was very, very real. But here's the real kicker. A 60.1% drop in adjusted EBITDA. It fell from £8.1 million to just £3.2 million. And why? Well, obviously revenue was down, but the bigger issue was underutilization. Think about it like a factory. When those massive manufacturing assets aren't running at full speed, the fixed costs just completely eat into your profitability. Now, this didn't just happen out of nowhere. The first half of 2025 was a perfect storm of macroeconomic headwinds. We're talking global tariff uncertainties that were rattling the whole supply chain. Then you had total softness in the wireless market. Customers had way too much handset inventory sitting around, so they just froze new orders. Add in some pretty severe delays in military and defense funding, and yeah, it was a rough start. So how do you fix it? Let's move to Section 2, the £81 million strategic fundraise. This is where things get really interesting. They didn't just go hat in hand to the markets. This £81 million lifeline is heavily anchored by a strategic £45 million investment from MACOM, a major industry partner. The rest is made up of a £23 million reinvestment from existing note holders, plus $13 million from a placing and retail offer. It's a total recapitalization. Let's actually zoom in on that MACOM deal for a second. It was brilliantly structured. £30 million straight into equity, alongside $15 million in new, non-interest-bearing convertible loan notes. And the best part? It's all tied to long-term supply agreements. That's not just a cash injection. That's a massive vote of confidence from a key partner. So, what's the plan for all that cash? It's actually highly practical. First priority, wipe out their existing bank debt with HSBC. Get that off the books. After that, they're using the funds to support their day-to-day working capital and to keep funding their long-term strategic investments. It literally bought them the financial breathing room they needed. IQE's CEO, Jetta Meyer, really hit the nail on the head here. She called the $81 million fundraise a transformational investment that gives them the balance sheet strength to invest in future growth while keeping their global asset base intact. That's the core of this whole turnaround. Shore up the foundation today so you can actually afford to grow tomorrow. But money alone doesn't solve everything, right? That brings us to Section 3, operational shifts. They had to streamline for efficiency. They had to make some tough calls. Over in the UK, they launched a strict optimization program. By Q1 of 2025, they stopped manufacturing at their South Wales silicon site, and by the second half of the year, they completely exited the facility. They moved those vital activities over to their Newport site. It was a direct fix for that nasty underutilization problem we talked about earlier.
And they didn't stop there. Over in the US, they completely shut down their Pennsylvania manufacturing facility. They also shifted operations around in Massachusetts and North Carolina, and even sold off some older US reactors for quick cash. The whole goal? Build a leaner, vastly more focused global footprint.
All of these physical changes point to one overarching theme for the company right now: intense fiscal discipline. They are locking down discretionary spending and obsessing over operational excellence to improve their yields. They are making absolutely sure every single remaining asset is pulling its weight.
Okay, so the bleeding has stopped. Let's look forward to Section 4, AI and the 2026 Outlook. This is where the story gets super exciting.
Before we get into the numbers, we need a quick tech lesson. We have to talk about INP, or indium phosphide. This is an advanced semiconductor material that is literally the secret sauce for the high-speed optical communications needed in modern AI data centers. Look, traditional silicon is maxing out. It's too slow and uses too much power. Indium phosphide steps in to handle the insane data loads that AI requires. And because of their expertise in this material, IQI is stepping up as a critical enabler of the whole AI architecture. They've already snagged multiple Tier 1 design wins for next-gen optical interconnects, and they're getting orders for ultra-fast micro-LED solutions specifically built to fix data center bottlenecks. They aren't just riding the AI wave, they are literally building the plumbing that makes it work. So the wind is finally at their back for 2026. You've got this explosive, accelerated demand for indium phosphide in hyperscale data centers. Plus, the aerospace and defense markets are recovering beautifully, and consumer smartphone demand for wireless products is bouncing back. All their markets are lighting up at once. Put all of that together, and what do you get? Thanks to surging demand and an incredibly strong order book for the rest of the year, IQE is now projecting revenue growth exceeding 20% for 2026. Plus, they expect that to translate into a high single-digit or even low double-digit adjusted EBITDA. Talk about a stunning pivot from the dark days of early 2025. So, I'll leave you with this question to ponder. As the whole tech landscape shifts beneath our feet, will this massive AI infrastructure boom be the permanent catalyst that solidifies IQE's turnaround? I mean, they've raised the cash, they've leaned out operations, and they hold the keys to the tech that AI desperately needs. The stage is totally set. Thanks for joining us for this explainer, and keep learning.